A look at your markets news now. Asian stocks lost ground once again with concerns around the Chinese stimulus plan lingering and worries about what the near future will look like from an inflation perspective when Donald Trump effects some of his new aggressive economic policies. This has also resulted in expectations that interest rate cuts out of the United States will likely be shallow. The Nikkei share average ended the session down 0.5%. The Hang Seng Index declined by 1.96%, while the Shanghai Composite Index lost 1.73% at the close. The Donald Trump presidency excitement on U.S. stocks appears to have fizzled out, with major indices closing almost flat to declining, with market participants now more interested in looking at macroeconomic factors like inflation. Yesterday, the U.S. CPI data for October came out at 2.6% on an annualized basis, which was in line with market expectations, rising from September's reading of 2.4%. From September to October, inflation rose by a steady 0.2%. The Dow Jones Industrial Average closed up 0.11%. The S&P 500 ended the session flat, up 0.02%, while the Nasdaq Composite Index finished the session down 0.26%. Taking a quick look at the indicators, the JSE's all-share index is down 0.33%, hovering at around 83,494 index points. The rand is trading at 18.35 against the US dollar, 23.21 vis-a-vis the British pound, and 19.21 against the euro. The price of gold is trading at $2,541 an ounce, platinum at $937 an ounce, while Brent crude oil is trading at $72 a barrel. All right, I'm joined by Mohammed Wagli. He's a portfolio manager at Sasfin Wealth. Thank you so much for joining us, Mohammed. So it looks like the excitement around the Trump presidency has all but fizzled out, with players now looking at the realities in terms of potential inflation and interest rates cutting story not likely to be as rosy as previously thought.
Thanks, Nompu. So, truth be told, I don't think we saw much excitement locally at all. But, needless to say, American markets were absolutely flying subsequent to the election results. We also saw, Bitcoin and some of those other Trump trade type instruments flying. But locally, performance was muted, if not negative. We've been seeing the dollar strengthen against the rand, I think 4 days in a row now. It feels like we blinked and now we're at 18 Rand 25 on the dollar. But I think you sort of hit the nail on the head in terms of, I think going forward, the narrative is coming back to the inflation story, how many rate cuts are going to be feasible going forward. And you touched on this earlier. I think that's especially in light of the threat of tariffs coming in. I think one thing worth noting, there is actually quite a bit of positivity that I'm seeing, and that's around the potential for deregulation and perhaps how that can offset the tariff story. That's going to take quite a bit of time to play out. And I think we will see sort of a bumpy road in terms of how the interest rate story plays out. But I would say that I was quite surprised to see, quite a bit of positivity coming out of America, interestingly so, in my opinion.
Yeah. So according to Stats SA, mining production rose by 4.7% on a year-on-year basis. That's quite a positive performance given the sector's recent track record. What are your thoughts on the latest number and your broader take on the resources sector?
Yeah, so absolutely. I think we beat expectations there on those numbers. I think we were expecting September numbers to contract. But if you look at it on a quarter-on-quarter basis, we're up 1%. I think going into these numbers, the expectation was that the impact this would have on GDP would lead us to be sort of up on the up on quarter three, but more or less flat at, 0.1%. I'm hoping sort of subsequent to these numbers, we can see a little bit of a boon. And then, sort of more broadly speaking, I think the resources index is relatively insulated from, I suppose, the narrative, that's coming out of America just regarding sort of the new president and things like that. I think what's probably a bit more relevant here is probably what happens from a Chinese perspective. We really need to see a bit of a pickup there, before we see some positive movements outside of the gold space, which I think outside of gold has been relatively depressed. Looks like we're at a downturn, hoping, we hit that bottom or relatively soon, or hopefully have hit it already. But hoping that earlier in 2025, perhaps we can get some type of catalyst there. Perhaps we can see the Chinese stimulus start positively affecting us, positively affecting demand for the commodities that we're trying to get out there.
Well, we can only hope. So I see that the National Treasury announced that it issued $3.5 billion in international bonds, one being a 12-year bond and the other being a 30-year bond at yields ranging from 7.1 to 7.9%. For the benefit of some viewers, the yields really speaks to the interest rate that South Africa is going to have to pay on those bonds. And of course, National Treasury saying that these were oversubscribed, which shows that many international players were interested to lend the sovereign money. So what are your thoughts on this? Is this sensible? And I guess South Africa still doesn't really have much by way of foreign debt exposure anyway.
Yeah, so I think from that perspective, it's not, I suppose, unduly risky. But what I will note is that this was oversubscribed by 2.5 times. And I think that actually makes a lot of sense given the sort of context of uncertainty that we're seeing around local equities. In my opinion, this seems to be a very savvy move by Treasury. What it's going to do is it's going to give sort of foreigners access to relatively high yields without exposure or much exposure to the South African equity risk premium. So, from that perspective, it wasn't really a surprise to me that this was oversubscribed. I think there's quite a bit of value here, and the grey listing had made things a bit more arduous for foreigners to be investing. So really good, that this was brought out to sort of foreign capital markets, and really good to see quite a bit of buy-in here. All in all, I would say quite a savvy move from the Treasury. Very happy to see this.
Awesome. One last one. MTN, they came out with a quarter update for the 3 months ended September 2024. Indicating that revenues are going to be down by about 18.5%, and also citing Nigeria lagging their operations yet again. They're down about 50%. Your quick comments, please.
They've been under quite a bit of pressure. Broadly speaking, I would say that, we haven't had too much of a surprise here. They did mention that subscriber growth was up, and, I suppose that is good to see, but ultimately not too much of a surprise. I don't think the market felt, one way or the other about it. The company's under quite a bit of pressure, and the guidance pretty much alluded to that. You mentioned Nigeria, but there's also Sudan to be worried about. So, yeah, a long way to go for MTN, I think.
Yeah, very risky play, that one. Thank you so much, Mohammed, for your time. That was Mohammed Wagley. He's a portfolio manager at Sasfin Wealth.